Hey everyone, this is Kirk here again from OptionAlpha.com, where we show you guys how to make smarter trades. So welcome back, and in today's video we're going to cover all of the opening, closing, or adjusting trades for July 2nd and actually for July 1st, which is the HPQ trade. Because we made that trade yesterday, it was just one trade, so we're going to cover it tonight in the video. Now remember, as we're going through this, if you guys have any questions or comments, please don't be shy. Ask them right below the video. I'll make sure that I get back to each and every one of them personally. Make sure we get your guys' questions answered about the trades or any of the other trades that we have currently open and working. So starting off tonight, let's go over the HPQ trade that we made yesterday, which was July 1st. So Tuesday we made this trade in HPQ. Again, it was just one trade. Sometimes if we only get one trade filled, we're not going to do a whole video tutorial to send you guys out on that one. We'll just kind of roll that into the next video tutorial like we're doing tonight. But in this instance, it was just a very simple debit call spread that we entered in HPQ, very, very similar to what we've done a lot of the times before in the past. And so for HPQ, we went all the way out to August, giving ourselves lots of time between now and expiration to be right, and really just trying to add a little bit more long delta to our portfolio, right? So we've got definitely a lot of positions that are negative delta or short delta. Definitely oil is still some of our bigger positions. We're definitely still short and bearish on oil, at least right now. So to kind of hedge that and kind of even out the portfolio distribution, we went ahead and just started adding some long exposure with HPQ and some of the other things over the last week or so. In this instance, we went ahead and bought the 33 options and sold the 35 strike calls against them. So we bought the 33 strike, sold the 35 strike. The net price between the buy and the sell is a debit of $112. So that brings our break-even price to $34.12, right? All we have to do is just add that first strike to the actual price of the debit that we paid. Again, bringing our break-even point to $34.12 for HPQ. Now on the chart, why do we choose the debit spread? Well, in this case, the stock has actually been a pretty resilient stock, right? It's just continued to move continuously higher and higher as we move through the last couple months. And it has really low implied volatility right now. So our choices are really a ratio spread, a calendar, a diagonal, or really a debit spread. And in this case, we like the debit spread just because of the pricing that we got the day that we entered it. It was really good pricing. We got favorable pricing, and the fact that we were actually buying it with a little bit of intrinsic value left in it. It's kind of obviously turned around here today and was down almost 1%, so that kind of worked against us in today's move. But generally, we see this stock continuing to move higher, and it's just kind of on this slow trajectory higher, and we want to give it a lot of time to do that. So all we need is a move anywhere above 34. So here's 34, is right above where it's trading today. We just need HPQ between now and August expiration to trade anywhere above that, and we'll have an opportunity to take a profit. And that's ideally what we're looking for. We're not looking for a home run here. We just want a quick move above the market price. All right, so the other trade I do want to go over and spend a little bit more time on today is UAL. And this is because we have a current strangle in UAL that we adjusted today by rolling down the top side of our trade. Now the actual adjustment order that you'll see is a vertical spread. And that doesn't mean that we're actually entering a new vertical spread, but we actually had and were short the 40 strike on the put side. So we were short the 40 strike below the market, and above the market we were short the 50 strike on the call side. So in this case, all we've done is rolled down our 50 strike to 42, which is right here. So we've rolled down our 50 strike closer to the market as UAL continues to move lower, and I'll go over a chart of that here in a second. And so by entering that trade, we entered a new order to sell the 42 and buy back our 50 strike, which basically creates this very wide looking vertical. But again, it's just an adjustment. We are still now short both the 42 calls and the 40 calls, so very close to where the market is trading right now, and kind of brings in that range. And we took a credit in doing this to roll down that spread, which is obviously what you always want to do if you're rolling in some sort of vertical or iron condor or credit spread. You always want to take in a credit, and that helps increase the total credit on all the trades that you're making or all the options, but also helps move out your break-even point further into the future. So let's look at a chart here of UAL so you guys can see exactly where the stock has been. It still has really high implied volatility, kind of closed at the low end of the range here today, and this is why we made this adjustment, because we started to see this kind of breakout pattern below our 40 strike. So you notice our 40 strike is right here. That was our first strike. It definitely pierced that level and now went into the money. So our 50 strike, which was way, way, way up here, it's not even on the chart, we went ahead and rolled that down and closer to the market at 42. So you can see we were fairly aggressive in our roll, but we still left an opportunity to make some money in this trade, and we still leave even more room to roll it even closer. We could roll it down to the 41 or even to the 40 between now and expiration. But implied volatility is still high, so this is still a great trade. The 50 strike, the reason that we got rid of this strike, because I know I got a lot of people who were asking questions about why we got rid of this strike in general, is because the 50 strike actually is serving us no purpose right now. So the 50 strike for July expiration, I got to actually expand all of these out here. The 50 strike that we had originally sold for somewhere, I think around 70 or 80 cents, something like that, is now trading at about $5. So it's serving us no purpose to leave that side of the trade on, right? It's just sitting there, and all we can make between now and expiration, which is 16 days away, is another $5. So we've made all the potential money we could possibly make. So at this point, what we did is we went ahead and rolled this thing down and closer to the market to take in a substantial premium. You'll notice that there's not really a lot of benefit to coming into the 46, 47 range. You only take in about $10 after a net credit of paying and closing out this 50 strike. So by doing this, we rolled down to the 42, which gave us about a 65-cent credit overall before the stock continued to move today, and also helps kind of recenter our strategy over where the market is. So here's what our profit loss diagram looks like right now. We still have a nice little profit even if UAL stays right here. So remember that our short strike on the bottom side or the put side is 40, but because of all the credits that we've taken in, that moves our break-even point down to much closer, around 38.5. So that's really the line in the sand that we have. We're kind of looking at that level as our point at which we start actually really losing money at expiration in July. So even if the stock sits right here, even though it's in the money on the put side, because of all the credits that we've taken in on the call side and the rolling, we actually will still make money on this trade. Now ideally what we want is we want the stock to close anywhere between 40 and 42, right? In that case we make about $250 or so after all the credits, and so that's ideally what we want to see. But we still have room to roll this thing down. The whole idea here is to kind of recenter the strategy, move it closer to the market, force the market to continuously move lower, and if it does, then we'll just keep adjusting down and taking in more credit along the way. So as always, I hope you guys really enjoy these video tutorials. Make sure that if you have any comments or questions, you just ask them right below in the comment section. I'll make sure I get back to all of those before the market open tomorrow. Now remember, if you are getting these alerts and watching these videos and you're not part of our membership, you just have to understand that you're actually getting these alerts about 10 to 15 days after they're sent out to our members. So you're definitely behind the 8 ball and you're missing real-time updates. But the good news is obviously you can test drive everything we have free for 7 days just by going over to optionalpha.com, putting all your information in. You don't have to put any credit card or personal information in, and you can try everything that we have free for 7 days, see if it's helpful, see if these video tutorials, live time and live trading updates can help you get to the next level. So as always, hope you guys enjoy these videos and happy trading.